angry that they purchased at the top. Later, after they call it a bubble, a lot of people actually said it's actually a scam. Read very carefully. Based on the market analysis, people who purchased at the absolute top of the silver at this time, around 2000s, they had to hold over 20 years just to break even last year. Pay very close attention. Based on market analysis from the era, people who bought at these particular prices were experiencing excessive frustration at the times of irrational sentiment-driven nature of the market rather than just supply issues. While some believed in a long-term value. This sounds familiar? A lot of people now in the comments, we're here for the long run. While some believe it's a long-term investment, others face losses from the rapid price crash. What about sentiment? Well, back then the sentiment was, of course, over the supply. Everyone was bullish. No one cared about the actual intrinsic value of the silver and long-term price action. Observers noted that in the early 2000s, like the dot-com bubble, silver price movements were driven heavily by investor feelings and speculative frothy sentiment. Same like now. People are buying because other people are buying. Unwarranted. I'm here to warn you, okay? It's not gonna be like the other time. Investors often found themselves in position where they had bought into a runaway speculative frenzy that was not supposed by fundamental supply changes. Guys, when there is no fundamental at the exit of anything that you're buying on the equity markets, on the precious metal market or crypto markets, the exit is usually always the same. People got rinsed. And in the case with silver, like I said, how would you feel if you have to wait 20 years, your money locked on losses just to break even, not to make money? I guarantee you there will be, or there had been people who last year just broke even, waiting this 20-year period, and they didn't even want to think, oh, it might go hard, I might actually make some money. No, let me just sell. Let me just, forget about it. I've been waiting 20 years. I don't want to hear silver anymore, okay? Look at this. Volatility and the crashes. Even with the potential for long-term growth, something that a lot of people now are buying into, the main reason for it, those holding silver in the 2000s faced significant volatility, such as major rapid and historic crash. Of course, there was frustration with physical disconnect. Some investors, particularly when holding silver trust during the volatile times, expressed frustration regarding the disconnect between the paper silver prices and the actual physical supply of the silver, which is happening as well right now. If you go and look at the exchanges, buying the actual futures or actual silver on the equity markets versus holding the actual assets, physical gold and silver, have different prices, have different value, right? And this is the same frustration. Why? Because the game is always the same, but the newcomers don't know this, so they're gonna get rinsed again. Pay very close attention. In summary, those who lost money often cited an irrational bubble-like behavior of the market and high-risk speculative nature of trading silver during this period. Again, you need to understand what is happening by looking what actually happened, because the same people are trading the same stuff and they're buying into the same stuff by looking at hype, irrational thinking, sentiment, which is oversupply, which means that the sentiment is overtaking the supply, the actual fundamental value. If you're trading, that if you look at the RSI index, right, it shows you oversold, overbought, and you have the fair value, which is the fair market evaluation of the asset. People are not looking at any of these. People are just looking, okay, is it up? And people are always willing to buy when it's up. And most of them are willing to sell when it's red, which is completely opposite, right? It almost feels like you're willing to buy your home when your home, like, it's $150,000 more expensive than last month, right? right? But if your home that you're planning to buy is $150,000 lower, you're not interested in buying because you were thinking, first of all, it might go lower. And second, you might be thinking, oh, it might actually not be a good deal. If the price decreases, if I buy it, it will go lower. So it is a two-way think about it, right? First of all, you want to go lower so you can buy it, but you don't want to go lower because it might actually be a bad deal and it will depreciate, or it might depreciate even lower after you purchase it. So it's crazy checkmate scenario. And of course, it all ends up with volatility, crash, and frustration. Same three scenarios. And this is not me making up anything. I just went on Google and I just typed, what did the people who lost money trading, holding silver in the crash of 2000 said about the crash? That's it. I just asked Google for summary. I'm not making up anything, okay? This is proven by the facts. As you can see over here, everything comes from a particular link with comments, summary, articles from 2000. And people got rinsed. Imagine what they came home, what they said to your wife, it's down. We put 100K, now it's 20K, it's 30K. I'm sorry, I apologize, right? They have no explanation. You know why they don't have explanation? Because they don't have reason to buy into it in the first place. When you have a thesis and when you have a sophisticated framework to define your thesis, right? Why you buy Nvidia? You have a sophisticated explanation. Nvidia supports the AI infrastructure, which AI infrastructure cannot exist without Nvidia. Well, Nvidia presents a bottleneck through the industry that is evolving and growing on the institutional or individual level. So this is how you build your thesis. This is how you understand the main reason why you buy into something. If you stop some of these precious metals bulls on the market and ask them, why did you buy? Now or before, most people have zero answer. Zero answer. They will most likely pull out their phone and they're going to show you some video or something or someone that told them to do so. The question is, when everything crashes down, right? What are they going to say? Are they going to go again and back and look into this person, ask for a question, for advice? No. Because it is not bad to lose your money investing if you really put up the time and work and you predicted something is going to happen. You may be wrong, but you lost or you made money based on your own knowledge and expertise. It almost feels like an achievement because you put up the work, you test something with your own money. You don't use leverage, you don't use someone else's money, you don't use your friend's money, you don't listen to somebody else on the street. You just took your own money, did your own research and due diligence, and then you waited to see, is it gonna be a success or is it going to be a failure? This is how the man should supposed to approach everything that appears to be an opportunity, or it might end up being a trap. Gold and silver prices crash in historic sell-off. Gold prices to hit new lows of $1,450 and silver to go down to as low as $12 per ounce. Well, this is how you print back holders in real time, but we already discussed this in the previous video. People already pissed off, probably crying their eyes out. They borrow money, they use leverage. But who I am to argue with the hype voice on the markets? Let's stick with the details. So the spot prices of silver down 28%. 28%, what a sell-off. My little free end, and people were making the case that the precious metals are not stocks, are not crypto, are not the US dollar. They're valuable, they are not fluctuating, they couldn't go down. Nonsense. So the prices was hovering around $83, currently it's even lower per ounce. Not a surprise, you don't have to be, excited because things are going to get even worse. According to the summary over here from the X, this is, or this was, and most likely it's not going to be, the worst single day drop since 1980s. and all the backholders of silver who held over 20 years just to break even. Already having a small reminiscence. They already remember that, oh my gosh, last time what happened, it might happen again. And believe me, if these people went through this particular crash, they have to held their silver bags for 20 plus years just to break even. They're going to be the first ones selling right now, seeing weakness on the market, not waiting another 20 years to break even again, right? Forget about what Peter Schiff and the people like Peter Schiff saying that this is a buying opportunity, this is that. Same thing what Robert Kiyosaki was mentioning, that this is going to be the biggest crash of our lifetime, and this and that, and buy Bitcoin. And what was it, November or December, somebody reported that he sold some Bitcoin. Don't ask me why, ask him why. Also, over here, the sell-off was followed by President Trump's nomination for the Fed, which was Kevin Walsh. Why would that be even the case? Why people be reacting like this? Well, this is acting like this because the US dollar will again go back to the previous levels and will sacrifice all the gold and precious metals price action because the dollar will regain its power. What a bad news for gold and silver investors, but even worse news for BRICS, which in fact launched just 2 days ago their new currency called UNIT. If you're not following the international economic news, I honestly believe it will be very hard for you to follow up and really match the pieces, but this is a very strong checkmate move from President Trump because now he's seeing what is happening with BRICS, and BRICS was trying to capitalize on the weak dollar, trying to capitalize on their gold and silver reserves, trying to build their wealth, country wealth, and their hedge. Because, let me explain, the new currency of BRICS called UNIT is 50% backed with gold and 50% is backed by basket of currencies of the countries in BRICS, which trying to make it less volatile, trying to make it in some form or shape at least copycat of the early dollar gold backing before or after Bretton Woods, which, don't take my word for it, it most likely won't work. But anyway, let's go back to the facts. Kevin Walsh is very, very bullish on the dollar, and Kevin Walsh will create much more value and much more contribution and intrinsic value for the transacting in US dollar. Will most likely reduce the Fed exposure to gold and silver, will most likely create a long-term cooling off the precious metals, and this also might trigger actual oil prices to hit new lows. Just wait for it. Again, the losses today alone totaled $3 trillion to $7 trillion across both metals alone. We're not even looking into the smaller precious metals market caps in the sell-offs like copper or palladium. Things are gonna get even worse over there. Not to mention the liquidity over there is much worse. So this simply meant that there is a very high chance a lot of people who try to sell weren't able to get filled on the prices they're trying to sell. And again, if you have a basket of precious metals, if you're a precious metals bull, someone that is forever and in the future is only going to be the precious metals, forget about stock market, you do understand that these people will be panic selling first of all this type of precious metals. The ones with the lowest liquidity, the ones that is very hard to exit. It's easy to enter, everyone is willing to sell you their palladium, their copper, but it's very hard to sell. Why? Because there's not a matching buy order on the opposite side of the equation, and also there is no market making on the precious metals. So there's no a market maker who is forced to buy when no one wants to buy, or forced to sell when no one wants to sell. Again, people don't want to listen. People are extremely arrogant. They argue. I've seen people arguing with Ray Dalio, with Warren Buffett. I've seen people, especially in these financial news channels, having zero achievements in any financial markets and arguing with these legends, right? So I'm not surprised people will still be arrogant and still will be claiming that they know more about the market, they know more about gold, they know more about silver, and they never get rich. I don't know how this works. If you know more than the biggest OGs, if you know more than the billionaires, if you know more than individuals from Wall Street or financial markets or private equity funds, well, then you most likely has to be wealthier than them, but you are not. So I guess this destroys your thesis in real time. Anyway, crypto market also suffer. We have to put everything on the table, right? We're not excluding the Bitcoin sell-off below 82,000, but that's not a news. Remember, we had Bitcoin around 80,000 in November sell-off. I made a special recap video where in 2025 we only had 3 good months for crypto. It was March, it was August, and it was September, and everything else was complete garbage. Sell-offs, chop, sell-offs, and completely die out. And now we're having this, widespread liquidations. But like I said, this is not a new news for crypto. This is not new news for tech sector, considering the yesterday's earnings, very mixed reaction. Microsoft overspending with not clear roadmap in the future. Only Meta benefited because the benefit of Meta using AI, collecting more money from ads, and Meta ad campaigns are very profitable. Meta also did the partnership with Ray-Ban, which in fact somehow became successful. I was very surprised. The product looks very ugly. Like the V1 version 1 always is like, not so perfect, not so polished, but I guess people like it. So most of the market crashed today. We are going to be honest, but nothing of the silver and gold bulls was not expecting to happen. So this is why we have to point out this, we have to highlight this, and we have to give them a red card, right, for not being experienced or knowledgeable about the markets, expecting that only silver and gold will continue and persevere all and every market crashes. It's funny, it's ridiculous, and these people should have the reality check, not only from me, from the market itself. Many people are not ready for the crash that is coming in gold and silver. Why? Because they lack historical context. A lot of people thinking that the prices of gold and silver will continue to go higher and higher without having the drawdowns and drawbacks. But why this is important? This is important because a lot of these people have lack of sufficient historical context and knowledge about the markets. In 2006, the price action of silver mimicked identically the 2026 small pullback, small sell-off. The parabolic surge in 2006 of the price of silver led silver to go to $15 per ounce. Everyone was cheating. People were preparing for $100 per ounce. What happened? This price action followed by 40% plunge. 2006. Why this is funny? It's funny because we had 40% crash 2 weeks ago in silver. The problem is that if you again go back to historical context, the silver didn't end up there crashing the price. Silver actually went lower. And the problem was that people have been holding and sitting on losses for 12, 14 years. How are we gonna feel about it? Instead of you making the right decision, instead of you picking or hedging or limiting your risk, you sitting or staying on loss for X amount of years, and you're not only sitting on loss, you are into something known as opportunity cost, meaning instead of you, making money of something else or being able to bet on something else, you're locked, sitting on your losses, can't do anything about it. Again, people have a very hard time understanding the concepts. And this is why the parallels, because you need to make a parallel between the past and the present, helps you understand and gives you better, not the best, but better chance to what could potentially happen with your portfolio, with your money, and the prices of precious metals, right? If you look at closely, in May 2006, silver skyrocketed 80% from $8.50 amid the, again, retail hype, same people, the usual crowd that is involved in hyping particular asset class. ETF launched SLV. This was another hype that contributed to the bubble. Also, we had some kind of industrial demand narrative that there will be more demand for silver, right? Remember there was like an EV, the beginning of start speaking out loud about electric vehicles and battery, which use a small amount of silver as well for the production. That moment, silver hit $15. just like the 2026 when silver hit 72 and later $121. The problem is that this was a bubble, and the bubbles are bursting. That's what usually happens, and that's what their lifespan looks like. The bubble never stays at the same size. The bubble never remains inflated. The bubble bursts, and a lot of people don't want to hear about this. So look at the parallels, right? We're talking about things that have already happened. Pay very close attention. We're not coming from some, figuratively speaking, Marvel movie scenario. This already happened. So you have nothing to argue, nothing to talk back. This already happened. So open interest in silver exploded, positions turned crowded, and momentum ignored deficit. Exact replica of 2026. We're talking about $3 billion plus ETF inflows, which indicates a lot of people with, let's say, mid-size net worth that use private banking. They call the bankers buy silver. The bankers bought through the ETFs, BlackRock, Vanguard, whatsoever. What happened then? Well, it was painful. The crash mechanics actually were triggered. What happened was that there was a new Fed chair. Oh, surprise, surprise, we do have a new Fed chair coming in May here. The Fed actually changed the interest rates. That back then it was Ben Bernanke who was the Fed chair. What he did is what most likely Kevin Walsh, the incoming Fed chair, will do, which is he will increase the yields on treasuries, which will make it more attractive. People will say, oh, you know what? Instead of holding this, I can hold this, have a risk-free investment, and just chill, right? Get paid even more. So Ben Bernanke increased the yields, which led to the dollar index, which is DXY, exploded. And when dollar explodes, you know what happens with all the leverage position of every asset class that is in contra sentiment with the dollar, gold and silver, trigger massive liquidations. The idea over there that everyone who was long using leverage on gold and silver got liquidated. They lost their entire capital. And then people who were smarter, who used their own funds to buy hold silver and gold, they were like, you know what, this thing is not looking good. I'm going to exit and I'm just going to buy treasuries. They look at the market. The market was kind of flickering, didn't quite give a direct signal. You cannot really go directional trade. You don't see, are you going to go the market lower or higher? Let's just go safe. And they went into treasuries. The strategy of Dan Fed chair worked perfectly. What this actually did to the prices of precious metals, 40% drop in silver. Overnight, margin call liquidations, people freaked out. That was the end game. Still, there were people hyping, saying, don't worry guys, it will go back up again next week. Next week was 15 years people waited to break even, not to make money. What a bad trade, man. Life is unfair, someone will say. The liquidity evaporated, disappeared. This is why when now I'm explaining to you and I'm showing you the data indicates that there is a very thin liquidity in precious metals, which means it is easy probably to buy in because there's always somebody selling, but it's hard sometimes to get your sell orders go through. Why? Well, you need a matching orders, right? Remember, there is no actual market making that helps you to indicate this. You don't trade this on the exchange. This is essentially a decentralized market similar to Forex, where the Forex works when investment banks work, right? This is why the transactions are different, the spreads are different, the fees are different. On Forex, you as well have to pay an overnight fee for holding the pair of the currency. So you need to understand this is much more complicated than a lot of people think. They just see the surface, they just see the packaging. They don't understand what is inside, and they don't understand how the value of what is inside can go very, very low and can stay low for a very long period of time. But like I said, people lack historical context because people are lazy. And when people are lazy, you know, it's easier to speak out loud nonsense. It is easier to talk back instead of sitting down it's weekend, let's open, let's look how much money we invested, let's see what is the forecast, let's see the moving averages, let's see what the analysts are expecting, let's see are institutional investors increased or decreased their current holding, right? Let's create a plan B or C. Let's see if the Fed chair actually repeats what the Ben Bernanke did, what will happen if I lose money, what I'm going to do, when I'm going to cut my losses. So many good questions that people do not really ask themselves, which is the biggest problem over here. Let me tell you about startup idea that is in huge demand, but no one is building. It has to be a new social media platform where broke people are not allowed to comment, essentially the haters, right? So it has to be a way, a technology where every user will connect their, net worth, bank account, portfolio. The system will validate that these people actually have credentials to speak on behalf of certain topics, give suggestions what is right or wrong. So broke people will not be allowed to comment, right? This is the huge in-demand social media that will become the future. You no longer will see clueless people speaking from in the middle of nowhere, broke losers commenting, oh no, you're wrong, this or that. They're trying to give their opinion. No one asks them about their opinion. They're trying to give you their perspective. All of the tech bros watching this build a social media platform where users will have a chance not only to validate their net worth, their credentials, their expertise, their success, and their track record, but also you will limit all the bots. There will be no bots, all the haters, all the broke losers, all the paid shoes and people who haven't done a single entrepreneurial venture, successful or not. Entrepreneur is entrepreneur, successful or not, right? Regardless. You take risk, you put your own funds, you hustle. So then you will have the most valuable company in the world, because when the advertisers show up, they know exactly who they're advertising in front of. Okay, this video has 1 million views. All the commenters are sub $300 million net worth. You know exactly what to offer. Imagine what kind of brands will show up trying to run ads on your campaign. So you effectively don't need so many users like YouTube, Facebook, Instagram. You just need to have the high life on your platform. The real rich people, not the people who are flexing, not the people who are pretending, not the scammers, not the losers, not the bots. So Tech Bros, this is the platform you should build. So when you publish a content as somebody who is expert in their field, and when you sit down and read through the comments, you said, you know what? This person is actually right. He has made, $150 million more than me in this particular business. Let's say I speak about gold and silver, right? And somebody said, you know what? I made, $45 million last week. I'm gonna show you how to do it. I said, fine, let's see each other. Let's talk about it. Let's have a Zoom talk, right? This is absolutely amazing and most valuable potential social media, because every big fish will want to be part of it. No losers will be accepted, no scammers will be accepted. Everyone will be vetted, and they will be created a massive value for every participant on each side of the equation. The advertisers, the content creators, and the founders themselves. By 2028, 81% of the people will be replaced by AI. It's okay, right? You already know that, you already expect that. And the biggest lie that people are trying to sell you right now is, calm down. AI will create more jobs, it will not replace you. You know what's funny? The same things were said to the people who were building carriages when Henry Ford was building the Model T. They were saying it's okay, the new cars, they will not replace you, they will just create more jobs for you. I don't think it actually happened, right? Exactly. So knowing this part of information, you need to start preparing yourself, because the only people who will be left, this remaining 19% of the workforce, will be the geeks feeding the AI, the super intelligent streams, the super geeks of the world. Someone recently said that this is the decade starting 2026, the decade that is named the revenge of the geeks. So all the people who will actually be happy throughout this decade, will have fun, will make a lot of money, will be the geeks, you know. So this is why you want to pay very close attention. And this is not the Andrew Tate matrix. This is a completely different level in which even if you try to learn something right here, right now, the information is changing and develop so fast that all the knowledge that you're acquiring today, tomorrow, it's an old story. There are new models every single day that are released, some of which sometimes are worse than the older model. And you will see the geeks are saying, you know what, we prefer the older models, the new model sucks. This is the big red flag that you want to pay very close attention to, right? Again, there is no way back, considering that the infrastructure for hundreds of billions of dollars is currently built, or is building, or is about to get built. $500 billion, $1 trillion, data centers, so on and so forth. And this is kind of interconnected with all the precious metals trade and, you know, proprietary natural goods and resources. A lot of countries, particularly China, are trying to curb down and try to protect their intellectual property. And again, don't be just saying that a lot of these models are operating on expensive sites. So people said that the Chinese models who are copying the US models are actually operating faster, more optimized version, you know. And this is again a big question mark. I'm not a geek. I don't know why this works better, but there's something that we don't really know. Pay very close attention. Every single day, the people who are currently fired from the big companies are not the HR departments. You will see engineers, senior engineers from Google fired, senior engineers from Microsoft fired. You will see financial institutions firing people. And we're not talking about data entry positions. And then these people go on the open market and they're not gonna go and drive for Uber, right? Senior engineer work 10, 15 years for these big tech companies. Well, they're gonna start their own AI company. This is where the mass saturation comes into play. And imagine, it's not you against the big technology corporations, it's you against the corporations, the geeks that work in corporations, and then the geeks who are fired from the corporations starting their own AI companies. So the wave is not that high, the wave is like triple the size that you can imagine. A lot of people don't even think about this, right? This is why the conceptual wisdom that probably you want to build and understand and try to apply, because you have what? It's 2026. You have 2 years, brothers and sisters. You have 24 months to find something out that will be able to kind of put you on the side. Sure, there will be areas of business, domains of life where the AI will simply not going to be able to evolve that fast. The barber will still be out there, right? Not sure about the other utility workers, but remember, they're not doing all this replacement because technology is just better. They're doing it because it's effective. It drives the cost lower, makes things effective, cheaper. This is why Elon Musk is saying that in the future, when the robots taking over, everyone's gonna be rich because no one has to work, and people will just enjoy the good times. And I don't think so. Yeah, I'm not hyped about the robots either. So guys, just as much as I know, a lot of you probably are not into technology at all. They're not interested. They don't really care. Understand? I get you. It's kind of a forceful part of the history where a lot of people are forced to learn something that they don't want to learn. You kind of forced to at least probably take a position or learn a new skill in area where you really don't feel it. It's kind of an artificial knowledge in the AI world. But this is something that obviously will make companies more and more profitable. And the profits are always the most important driver out there. Everything is done for profits. Countries, governments, states, and cities, they all operate under the same goal, which is state to progress, to make more money, not to spend more money. And the idea over here is that this will replace a lot of jobs. And employment is one of the biggest lever that costs